and welcome. You're watching The Money Show and I am Kavita Thapliyal with you. When global markets wobble, currencies fluctuate and geopolitical tensions rise, there's one asset that remains a constant: gold. A timeless store of value, gold has weathered centuries of economic storms and today it stands once again in the spotlight. From soaring prices to the changing dynamics of consumer demand, gold is shaping up to be a key player in both personal investment strategies and global financial systems. But as central banks stockpile it, investors hedge against inflation, and countries wrestle with the power of gold-backed reserves, what's next for this precious metal? In this episode today, we'll unpack the forces driving gold's prices, delve into its shifting role in investment portfolios, and explore how geopolitics and global instability are rewriting the rules of gold's power. Stay with us as we dive into the gold rush of today and what it means for the markets and your investments. This is our Akshaya Tritiya special, and I have with me Sachin Jain, Regional CEO, India, WGC. Vikram Dhawan, Head Commodities and Fund Manager, Nippon India Mutual Fund. Chintan Haria, Principal Investment Strategy, ICICI Pro AMC. Sayam Mehra, former Chairman, GJC and Director, Unique Chains and Jewels Limited. Hello and welcome to this very special edition of The Money Show. And my very first question technically can be for all of you, but then let me just begin with Vikram. Vikram, gold is often called the sleeping giant, and history proves it. Prices can drift sideways for years before suddenly breaking out. Between October 2011 and 2022, gold hovered around $1,700, but since late 2022, we've seen a powerful rally, taking gold to an all-time high of 3,500 this month. Now, we saw something similar back in 2018 when gold moved from $1,130 to nearly 2,000 in less than 2 years. Now, in 2023, gold rose almost 13%. In 2024, it's already up by 27%. Even after a recent 6% pullback from the highs, the big question to you is, what's really driving the price action? Is this a classic early stage bull run or just a healthy correction before the next leg up? What will you say, and how will you explain us the dominant forces driving this rally?
Thank you very much for inviting me on your show. Every bull market of gold has different drivers. I mean, the basic drivers remain the same, but the dominant drivers tend to be different. For instance, if you talk about pre-COVID, the bull run was driven by the flows which happened in ETF, gold ETFs. So gold ETF started somewhere around 2004-5, and from virtually nothing, they went to about 2,500 tons by 2013. So that was the dominant driver at that point of time. If you talk about, obviously during COVID, gold was a hedge for anybody or anyone who could lay their hands on them. But post-COVID, the narrative changed. The central bank buying. So central banks, 15, 25 years back, the aggregate holding, if you saw a portfolio, a typical portfolio of a central bank, they used to have somewhere around 75-80% as US dollars, and rest was all other currencies in gold. But fast forward to 2024-25, and today the gold holdings are less than 60%. So this has been the main driver for gold prices post-COVID. If you talk about the fantastic price move that we have seen in 2025, it is again primarily driven by the ETF flows. So ETF flows till date are roughly about 200 odd tons. And it is not just the quantity, it is that the ETF inflows have returned after a hiatus of 4 years. So from COVID peak of December 2020, till middle of last year, we lost around close to 1,000 tons in ETF holdings. And in this year, they have come back after a long hiatus. So, and also what's worth noting is that while you may call it as investments flows with a hue of speculation, but just see where we are on the global AUM. The global AUM of ETF today is almost at the same level at the 2013 peak. So, despite whatever gold has done in terms of returns and prices in the past few years, by any state of imagination, gold is still under-owned globally. My personal view is that 2025, the dominant drivers will be ETF flows. Why? Because you will have some demand destruction on the physical side because of higher prices. Maybe there will be growth in value terms in consumption of gold, but in terms of volume, there could be some less flows. For instance, the latest data which has come from China for the first quarter, it says that year on year Chinese demand is down by about 5 to 6%. And even we'll have to wait and see how the Indian demand pans out during the season time. But some of it can be this slack which will be created by demand destruction on the physical side. It has to be taken over by the central bank buying and the ETF buying. So in my mind, ETF buying and ETF flows will be the key drivers for gold prices in 2025.
Chintan, now taking Vikram's point ahead, what do you see? We've seen a pullback of nearly 6%. Do you see this as a start of a deeper correction, or according to you, the trend is still intact? Even if gold cools off, are we in a new range, where the downside is almost by $2,500 and, not as people might want to wait for to invest 1,800 anymore? What do you feel?
So obviously, if you look at investors' behavior, they tend to get attracted towards the asset class which has done the best, and we've seen that in equities in India and globally now. Gold, with the kind of price rally that has happened, is attracting flows. But as has been seen in the past, we may see some consolidation in gold price for many years. And if the geopolitical situation, kind of turns for the worse, then gold price may have a leg up. But the kind of rally that gold has seen, it probably has to pause a little and consolidate before we can see the next leg up. On the downside, because gold as a percentage of overall AUM of the world, I mean, if you look at equity markets globally, more than $100 trillion of assets, the amount of money that has been printed in the last 15 years is also into trillions of dollars. And gold overall, we look at it even at today's price, is about $22 trillion of assets total. So it's not a very large part of allocations because, gold cannot be measured as such. What should be the right price of gold? So as an allocation, we are looking at investors, allocate 5 to 10% in gold, and that allocation should continue unless you have a relatively better outlook for some other asset class, which given today's uncertainty is looking difficult. So at best, we can hold on to what we have, and before adding a new, gold, we need to see the geopolitical situation. But downside does not look much because I don't think people will rush to sell gold because they did not buy much at a lower level. Thank you.
Right. Sachin, one thing I want to understand from you, does the fading US exceptionalism narrative makes the case for medium to long-term uptrend in gold? Would you agree to this? Could we be looking at resistance as high as 3,700 or even 3,900 in that scenario? What is your view?
Well, I think fundamentally what's really been happening is that just certain conversations and this whole Liberation Day, as you were talking about, was causing a lot of flux in gold pricing and generally in the world. Now that behind us, I think there is more stronger pillars on which one needs to focus on why gold is performing the way it's performing. And hence, I think that the narratives that Vikram did mention and Chintan did mention are important to consider. The financial as an asset class, the way gold has performed and as an asset class has attracted huge amount of investments in ETF. Just to share some numbers with you, the whole of 2024, there was an AUM addition of about $3.8 billion. Just in 2025, it's already been $19.5 billion added, and the rally continues. So that's an important one. The central banks continue to buy. And also the fact that the Chinese government now is opening up investments of insurance companies and pension funds to allocate, not just on what they traditionally have done, but also commodities like gold, which will be a new immersion of a pillar of demand. Now, having said these things, I think when you say that will the gold price completely be dependent on the American conversation, I believe not. I think certainly yes, it will be having some impact, and the whole debt under which the whole world is operating right now, in the long term, is an important pillar on how gold will perform. And that's not just the US debt, it's all the global debt. If you look at it, it's almost a question mark as to who is going to pay who. And hence, the whole rally of central banks is not a short-term rally, it's going to continue for long-term. And to your second part of the question, whether this is going to get to a resistance at $3,900 of $3,700. I mean, as World Council, we don't predict price, but all I can say is that the fundamentals are strong, and the investor should look at a diversification of a portfolio, and a 10 to 15% is a good investment that we always recommend. And look at gold as a long-term beneficiary to your overall investment.
Absolutely, absolutely. Sayam, for all the people who think that they have missed the bus, are they right to feel the FOMO?
No, I think, when you were seeing the rates were come from 70 to 80, then to 90, and then 1 lakh to 1,05,000, and now they have come down again to 98, 97, 999, including GST. I don't think that they have missed the bus. I think that still when you buy gold, it is bound to increase slowly, looking at the banks buying, looking at the central banks buying, looking at investment value, looking at the returns that it is giving at this moment. Still, if you see average of the last 10 years, we've seen about 14 to 15%. Right now, they've risen 26% this year itself. So I think there can be a near-term fallback or a breather for gold coming down in GST, or maybe 94 to 10. The rate in NCX right now can come to maybe 92 or 91, but that will be short-lived, and maybe a May-June, according to the technicals, the rate may reduce a little bit. But I see in the near term, in the year ending, the rates can come above to $36 or $3,700, maybe about 1,05,000 to 1,10,000. And in the long term, again slowly increase from $4,000 to $4,100. I think whoever investors wish to still invest in gold, they can easily buy gold coins, gold bars, or gold jewelry, maybe small earrings, sets, bridal items, and in the future, 14% returns is going to be double-figure returns are going to be an average which they will get, and it is one of the no-brainer, I can say, for the end consumer, which is there if they're invested in this kind of returns are there, which is obviously proved to be better than equity or any other markets, and can be encashed anytime whenever it is wanted in any city, any part of the country or the world.
But then Sayam, don't you think physical demand will go low looking at the prices? Do you see an impact?
See, when we see, 2 years back when the gold was 700 and maybe 60 tons had come in, then a year after that when the rate increased, 800 tons came in the country. I feel that India demand per se is of 800 tons, wherein it is divided about 500, 550 tons for domestic demands, 100, 120 tons for exports, and the rest for the bullion demand. This is always there. I mean, I don't think that in spite of the gold rate increase, the demand for the gold is reducing. The consumers, the millennials who were previously not buying this, were buying maybe in white goods, cars, maybe houses or something. I have understood that right now gold jewelry or gold buying or a fashionable gold buying is also become a new trend. The buyers are increasing. Maybe the volume wise they are reducing. Value wise it is increasing, because the gold rate has increased about 40% in about what is April this year and last year. So I think going ahead, I do not see that overall in the country, when the imports are coming to, it will reduce. The number of buyers will increase.
Vikram, are we left with, in terms of investments now? I mean, a lot of people in India definitely still prefer buying physical gold, even as investments. But it's high time they move to other investment instruments, options that are there for gold, maybe an ETF or digital gold.
So in India, still today, 95 to 97% of the demand is catered by physical gold, and that has also got a lot of cultural, affinities which people ascribe and attach to physical gold. So I don't feel that this figure will change dramatically. But if you look at the numbers, I mean, from the AUM point of view, gold AUM is less than 1% of the total mutual fund AUM. And, even from the asset allocation point of view, if we go to, 5% broad asset allocation of gold going ahead, now that the sentiment has changed and now that gold is being looked at slightly differently by even the hardcore hardened capital market investors. So I think maybe we would still have 80 or 90% of the gold being consumed in physical form. But from here, the flows in ETFs can only multiply, 2 to 3 or 4, 5 times in the next 5 years.
All right, Chintan, what is your view on this?
So clearly, I think the growth or trajectory of the mutual fund AUM itself will mean that as part of allocations, we will see gold allocations increasing. With the last 3 years rally in gold being strong, we may see a little bit more inflows coming in over the next 12 months or so. But in the long run, yes, gold is a asset class which will be there. Large part of it is, like Vikram mentioned, in physical, but from a convenience standpoint, I think gold ETFs provide a good, convenient, easy way for investors to allocate their financial gold. So other considerations apart of the touch and feel of gold in terms of jewelry, etc., that will continue. But there is no doubt in our minds that as allocations and as portfolio allocations at a investor level increase and they follow asset allocation, we will see gold ETFs also picking up going ahead. And if I may dare say, now we have silver ETFs as well. So both gold and silver will see investor allocations increase as we move along.
We haven't really spoken about silver, Vikram. Silver definitely is an industrial metal also, So what kind of a movement, a double whammy, because here it follows gold, it also follows base metals. Will the run-up be much more higher and brighter than gold for silver?
In terms of fundamentals, silver is the only commodity outside the agri commodity which is into a genuine demand supply deficit, and this is like the 5th year running when there is a significant sizable demand supply deficit. The reason silver prices have underperformed gold over the past few years is because there was obviously one of the main drivers of silver consumption is the green tech industry, which is led by solar, and China is a very big player in that. What happened in 2024 and in a bit of 2023 was there was a supply glut in China of the the solar panels or photovoltaic cells, if you would like to call them, and that resulted in destocking, which sort of created volatility in the silver prices. This is as far as the past is concerned. Now, looking ahead, silver, just to give you an example, 10 years back, the solar used to account for roughly 5% of the total consumption. Today, it is close to about 22-23%. So solar itself will become a very important driver for silver prices. Now, looking ahead, if we see any slowdown in the global economy, because obviously 65 to 70% of which used to be 50% 10 years back, now roughly 2/3 of silver is consumed for industrial production. So if there is a visible slowdown in the global economy, especially the two giants, China and or US, go into some sort of a slowdown, it will impact the metal sector across broadly, and it will also impact silver. But if you can look beyond 2-3 years, silver stands out as the commodity which has got the strongest fundamentals. So I think maybe because of the uncertainty which is going on due to the the trade war, you may see gold outperforming silver for 1 or 2 years. But I think the more you go into the future, silver fundamentals look more compelling than any other commodity, especially in the industrial or the metal space.
But then, Sayyam, I'm sure a lot of people would be still coming and doing a small ticket size buying because, just in the newsroom, people have been asking us whether to buy a little bit or not. I mean, not in terms of heavy jewelry, but in the form of shubh kharidari. And because it's an Akshaya Tritiya special also, even if the prices are high right now, what are your expectations? What do you see people buying? Is it going to be a shubh kharidari trend that we usually see during Akshaya Tritiya?
No, I think that since the last 4 days, there has been good buying, which is happening at the retail end stores. We could have seen, when the rates had gone high during February, March, at that time, the buying was not that much. Maybe in the start of April, there was a gimmick that the rates will come down from some channels internationally. At that time, people had come to resell their old gold. But when the rates again started increasing, we have seen in the mindset that now the customers have understood that there may be a 3% or 5%, 7% drop in gold, but it is here to stay and the rates are there to increase. We are seeing good footfall in our retail stores all throughout the country. We are seeing buying of gold coins, gold bars also. The people who want to do, millennials who want to do buying are buying trendy chains, lockets, earrings, rose gold jewelry. And for the bridals, jewelry also, a jewelry of 150 to 200, 250 grams is there. We've had every year we see a sales of about 20 to 22 tons, which is happening. But this year we are anticipating when we are talking that there may be a drop about 5 to 7% to 18 to 19 tons all throughout the country on that day itself. In volume terms, it is decreasing by 5 to 7%, but in value terms, it is going to be increasing by 20 to 25% because of the gold rate increase. So we are very positive with the discounts given, with the kind of all the arrangements done by our fellow retailers. The shops are going to open in the morning at 6:30 and going to be open till the evening at 1 p.m. So I think we all are upbeat. It is very important day for the entire industry because our trend for the next 3 months is on this day itself, Akshaya Tritiya, and I see good sales happening every year. Last year also, the rates have increased a lot from last Akshaya Tritiya to this Akshaya Tritiya. And this Akshaya Tritiya to next Akshaya Tritiya also, we are expecting a growth of 14 to 18%. So I think the consumers who come to buy on this day, be rest assured there is going to be profit and labh. What is in their mind, they are going to get from this day.
I was sold on that word you mentioned, discount. What's the plan for that?
No, previously the thing was that we used to give discounts only when there was less customers in the market, but somehow the trend amongst our retailers has come in such a way that there are some kind of discounts which are happening in our shops, about 3%, 5% when it comes to gold, about 15 to 20% when it comes to diamond, and also some gifts like white goods are given, some lucky draws are there, which is there, and those people who have already given their advance from the 1st of April, the people have already started giving token advance, and the buying happens on that day itself. Lucky draw happens on that day in the evening or the late night. So I think it is 2 times a year and once is Akshaya Tritiya is a time when the Tyohar is in such a way that people are actually excited to buy, and end consumer, the way the market is growing right now, the way the sentiment of the consumer is growing right now, they need a reason to buy, and what other than Akshaya Tritiya?
Absolutely, and I'm sure Vikram and Chintan both would agree that Shubh Kharidari, auspicious buying on Akshaya Tritiya can be in gold ETF. Vikram?
It should be in gold ETF primarily because it does good to the country also. When you have gold in physical form, it ends up in lockers and under the mattresses. It cannot be put in for any, it's not there to provide liquidity. What ETFs do is if you want to buy a small amount of gold, you have two options: either walk into a store which is selling physical, bars, coins, or jewelry, or you can buy it through ETF. So it is in a way reducing the import which the country has to do. Now you may argue that they are physically backed, but you have to understand that all the volume which is happening, it is exchanging hands. Some people are selling, some people are buying, which they would have done in the physical market and added to the imports of the country. Secondly, I think as we saw during COVID, that countries like the US specifically, just because investors had invested into gold ETF, they could get rid of it when the COVID was over and take profits, which is very difficult to do on the physical side. So, the trade war is happening. At some point, the markets will discount, the humanity will move forward, and, the risk premiums will drop on everything. So at that point of time, if you're holding your gold in a liquid form, ETF form, it will be a lot easier for you to, exchange it for cash or, whatever you want to do, sell it and, exchange it for some other security. So I think that's the reason a very good part of your portfolio has to be in form of ETFs. Also, I think you have to appreciate. Also, you have to appreciate that this is because of one of the reasons why people buy gold or even central banks buy gold is because of liquidity, and this is the most liquid form of gold that you can find.
One last question: what are the operational benefits? Chintan, if you could could just help our viewers understand this, like in 30 seconds. Same day you can buy an ETF and it's easy to redeem also. You can just buy it from the exchange.
Yeah, absolutely. Gold ETFs, much like you buy your equity shares, you just buy it on the exchange and sell it on the exchange. And the taxation also now is similar to your equity post the budgetary changes. So it's as convenient as it can get. And while you can go and buy physical gold, I would say that to your financial assets, you should add gold ETFs as well, as and when you find the prices attractive.
All right, so I'm sure the viewers would be waiting for the prices to cool down, but then everyone wants to make the most out of Akshaya Tritiya being an auspicious day. And thank you so much for being on the show today and helping our viewers as to how they can make their Akshaya Tritiya buying more auspicious. Thank you so much for being on the show today. Thank you.
Very much.
Thank you. That'll be all on the Money Show today. Thank you so much for watching. Goodbye.